Welcome to the top M&A entrepreneurs. Today, my guest is Nate Ginsburg. Nate is in the M&A community. Welcome to the show, Nate.
Yeah, thanks for having me.
Yeah. So, Nate, let's talk about where you started from, and then we're going to get into that recent acquisition you did because all of it has this origin story. So, how did you start?
Yeah, well, I think like I know we've discussed before, recently acquired Centurica, which is
Yeah.
the leading due diligence provider, specifically focused on online acquisitions. So e-com, content website, also do some SaaS and service. And that deal for me closed. We're right about at my 3-month anniversary, 3 months in. And yeah, there's been a 10-year journey, getting to this point, which I'll, now go back and, provide a little more context. And so yeah, I started my journey as an entrepreneur. 10 years ago, was backpacking in the north of Thailand in 2011 and met some guy working on his computer. And at the time I had just finished teaching English in South Korea for a year and was trying to think of, what I wanted to do with my life. I'm, 3 years old, and, met this guy who was, doing the digital nomad thing, which was pretty early days for that whole scene. And, was basically got super inspired by what he was doing and really decided that like, that's what I wanted to pursue with my, my career, my life. I mean, it's very intertwined. And anyway, so basically got home, had some ideas of business models from him, and he introduced me to like internet marketing and outsourcing and hiring people from all over the world, which just totally like blew my mind that this was even possible. And yeah, fast forward, was trying different business models, ideas. Uh, didn't go so well at first. Spent all my money, moved back home with my parents, and that's when I started just like freelancing internet marketing. I mean, in my some of these business attempts, learned some things, and I don't know. I mean, especially 10 years ago, at like a little bit of SEO experience, you're compared to most, all of a sudden you're an expert. And so
You're way ahead of most people. Yeah.
yeah, after I moved back home, I was focused more around just picking up like some freelance internet marketing clients, which, I did. Fast forward a couple of months, and I did. And, look, I wasn't making like, by now current standards, it wasn't a ton of money, but, it was enough to at least cover my expenses enough to, take off and kind of start my journey traveling and, as a location independent entrepreneur, digital nomad. And so I took off, from my parents' basement. This was in the beginning of 2013. And yeah, fast forward, I basically linked up and joined with this online entrepreneur community called the DC. That basically the theme is online entrepreneurs. They had their big event in Bangkok in October of that year that I attended. And attending that event just really like, opened my eyes again to just like, I mean, I met, there was maybe 200 people at that event, and these are all online business entrepreneurs, services, e-commerce, SaaS. And I mean, this like blew my mind that these were all people that, a lot of this community, it was like read the 4-Hour Workweek and kind of did it, one way or the other. And, I was still at the very beginning of my journey, and, was super inspired and, met these incredible, successful people that had, been in their businesses longer than I had and built, by my standards at that time, much bigger, significant, kind of stuff. And yeah, so this was huge for me, just being around this community. And I basically, like, Asia was home base, fast forward for, a number of years. And, I was living in Ho Chi Minh City, and it was while I was living there, surrounded by these other, online entrepreneurs that, I was still at that phase of my career. I was trying a bunch of stuff, some of this, some of that. Some things worked a little bit, other things, yes, no. I mean, throwing a lot of stuff at the wall. And, what hit for me the first thing that, like hit more than a little bit was selling products on Amazon. And so that became the first business that I really built. And this was I got into that in maybe 2014, 15. And fast forward, sold that business, had an exit in 2017. And so got into FBA.
Where did you sell that? What site did you sell that through, or was it a private?
Yeah, so it was a private deal to a big Chinese buyer that was actually like, they were kind of rolling up and aggregating deals, or attempting to, before this whole wave. And I mean, I was living in Vietnam at the time, so I literally, like, this all happened very quickly, and I was on a call with my business partner, and there was this character Jerry, who was like buying up businesses. Some other people in my community. He bought a much larger business of my business partner and other people. And anyway, it was just like, I was catching up with my business partner. I was in Ho Chi Minh City, Vietnam. It was like, hey, like, Jerry might be interested in buying the business. Like, what do you think? And I was like, ran a little napkin math, and I was like, well,
like, what's it worth first? You're like, what can we make? Yes.
Yeah. I was like, but like, long story short, was interested. And basically 2 days later, I was literally on a plane to China to meet with this guy. Went to their offices, had tea. They have like 200 Chinese people in their office there, running a large Amazon operation.
What were you selling online?
I was selling, it was a mix of products, like some glass wine accessories. So like wine decanters, wine glasses, champagne flutes, as well as like activated charcoal related products, was the majority of, but it was kind of a random mix of, e-commerce.
It was a product you were interested, like yoga kind of products, or what was it? Just
I mean, the Amazon game's more about like working backwards, finding an opportunity. And so, saw an opportunity in this category, sourced, imported, launched, rinse, repeat. Is
all right. So sorry, get back to your the Jerry in China. Yeah.
The FBA game and model. And so I fly to China to make a deal with Jerry. And, long story short, come to an agreement for him to buy our FBA business. And, fast forward, that closed maybe, 60 days later or something. And, this was the first of, the first next kind of existential, all right, what's important? What do I do? What am I good at? What do I, focus my time? And, some of the things that I knew and, further realized was like, one, like I've always loved teams, remote teams, leadership, hiring, like those have all been areas that I have been strong in. And so when I sold my FBA business, I kept the team, and, it was a small team, maybe 6 or 7 or something people, but, they were running a lot of the business for me, and they were good, they had experience. And so from there started offering services. And like, while I had good success with the FBA model, candidly, cash flows challenging. It was like the product categories that I was in was sort of a race to the bottom. And, I just wanted income. And so like, okay, services, like it's not gonna like 10x over the course of, a couple of months, or less likely, but kind of more steady, stable, and again, cash flow profitable. I'm not dumping in all my savings and maxing out credit cards to buy inventory, which I did with my previous business.
Yeah.
Anyway, so this was, I think we started offering services the end of 2017 or into 2018. And that became my other business, which is Sellerplex. And so Sellerplex provides a number of services for FBA e-com sellers. It's grown a lot over the years. It's a team of, I think it's around 70 people globally. We've got a big Philippines office, or big Philippines team. We have like 20 in our supply chain department in Pakistan. We've got, another 5 or 6 or something in our finance team in India. We've got people in Europe, our recruiting team. We've got like, it's a very global team. And Sellerplex has been doing well, has been growing, over the last years.
I want to ask you about this because I'm just curious back to the Jerry thing. Did you recognize what he was doing, which was 5 years ahead of Thrasio?
Yeah, I mean that. Well, yes, and there were a few others actually pre Thrasio that, like, I was in the FBA space, for a while and pretty well connected, when I was selling in this, and so yeah, so was aware there was. I mean, I can think of at least another, like, you know fairly big, attempt at the Thrasio business model that didn't go well. I mean, it didn't go well for Jerry, my understanding, as well as this other, pre Thrasio attempt. And yeah, I mean, we can talk about what's been going on in the whole FBA aggregator ecosystem, these days. But yeah, I mean, like, it's, on one hand, it's a fairly simple model. On the other hand, executing it correctly, you got to do a lot of things right. And I think some of the challenges that a lot of the aggregators these days, and the Thrasio included, and other ones post Thrasio, that yeah, running into similar challenges. I think that some of these earlier ones that didn't get the headlines and weren't as publicly, there wasn't as much publicity around. But yes, to your point, it was similar model, but earlier.
Yeah. So Sellerplex is is basically a service organization. You're helping SaaS, you're helping FBA, content websites,
So,
e-commerce websites, all of them just to execute better.
so to clarify, Sellerplex focuses on e-commerce businesses, and
Oh,
so
okay.
so Sellerplex, it's mostly FBA sellers, but we do Amazon account management, Amazon marketing, supply chain management. We have like a bookkeeping department as well, and these are services, overwhelmingly for e-commerce sellers. We work with some agencies, but e-commerce is that business, expertise. And so also, when after my exit, in addition to starting Sellerplex, I mean, I've always just been interested in M&A, and think it's cool. Buying and selling businesses it's exciting, it's cool. I had my exit, which was, super significant for me at the time. And yeah, like, wanted to do more and be more involved in M&A. And it's just like, I mean, I'm sure you and many of your listeners, like, it's cool, it's exciting. And so yeah, I also, like, did some smaller deals, acquired a content website, invested in a few
What's
other.
how big was the content website that you acquired, and kind of the traffic size?
Yeah, I mean, it was like a low mid six-figure acquisition.
Uh,
I was in the crypto space. Traffic, I mean, yeah, I don't know, like 1,000. It fluctuated between 1,000 and 2,000 and 500 visitors a day, or I don't know, something like that. We actually sold that business now earlier this year. So got in, got out. That was, I mean, a positive outcome. And as well as, yeah, invested in some of these other businesses, and all while, like, Sellerplex was still, kind of growing. And with Sellerplex, we, about a year ago, started to get into doing some due diligence projects, because there's this whole aggregator boom and buying all these businesses. And yeah, we actually were working with a broker friend of mine, doing some exit prep for, working with him on some of his clients. And due diligence, a lot of ways, it's just the other side of the coin of exit prep. And so we sort of modified the scope, did some outreach, and all of a sudden, landed and started doing some, due diligence projects. And so with that, things
was that on
were
the buy side or the sell side?
Buy side. So
Buy
I
side.
mean, we were working with initially we had some projects with a broker friend, and that was on the sell side. But then when we started offering as a service, was buy side. And so yeah, then coming into a couple months later, we were getting some traction around this new service line of due diligence, and it got me thinking more seriously about due diligence as a service category. And if this was an area that I really wanted to, like, double down on and pursue. And yeah, for a lot of reasons, I thought it was attractive. I mean, in a big thing, just because it's in the M&A space, which, I think we both share, an interest and excitement around. And so it's like, okay, cool. Like, and I've friends with a lot of brokers and just like, yeah, had been interested in M&A for a while. And so like, okay, I thought it could be a cool opportunity to really like get even more involved in the ecosystem. And so also at the same time, I was aware of this other business, Centurica, that, is really like the category leader. I mean,
Yeah, they've been around for a while. Yeah.
2013.
2013.
Yeah, like, the dinosaur days in terms of online business. I mean, man, like I'm like connected to a lot of the online, brokers and this, and, and a lot of them, we like lived in Asia together, like the Empire Flippers. I remember when they actually, like, Empire Flippers was a pivot from their previous business. And like, I remember I was, it was actually that same event in Bangkok when they kind of, this was a couple of years, not my first year, but when they announced their sort of like pivot onto building a marketplace, and Empire Flippers was launched from, what was before. And anyway, I mean,
Oh,
like,
I know Joe Magnotti. I sold my site through to Empire
oh,
Flippers. Yeah.
cool, nice. Yeah, had actually Justin, Joe's partner, was in Austin last week, and we caught up
They're
over
in
email.
Thailand. Yes. Yeah.
Well, they were, I mean, yeah, spent a lot of time. I've hung out with those guys a lot in Asia, but anyway, like, this was, they launched Empire Flippers. This must have been, I don't know, 2014, 15 at the latest, and Centurica was started 2013. I mean, some of these other ones too. I mean, like Quiet Light, FE, Website Closers, I think, like, started, around those years. This was really like the genesis of the online, M&A industry. In 2010, I don't think any of them existed. Fast forward a couple of years, they're these businesses are just launching. And fast forward to today, it's a thriving ecosystem. I mean, the category basically didn't exist 10 years ago, or was very, very, very early days in terms of, online specific M&A. And yeah, and so Centurica, was a part of this, like, industry genesis. And Centurica was was founded by, like, original founders, and then was bought by these other guys, Chris and Brian. And so this is, so catching up back to our story and my story. I knew Chris. We were friends online, and we, connected a little bit. And yeah, was very aware of Centurica, and I kind of got this idea in my, my head, like, wow, like, maybe Centurica would be like the dream acquisition for me, and just kind of like started thinking about this. And I thought that it was a good, combination of like my skill sets that could be added to this business to grow it and take it to the next level and all this kind of things. And so I was thinking about this for a while, until finally one day, shot Chris an email, the email that kind of changed everything and kicked off this whole chain of events. And basically reached out. It was just like, hey, we're doing more due diligence. I know, let's hop on a call and see if there's any way to collaborate, or, whatever. And so
Were they receptive to that, or did it take a little while?
no, they responded very quickly. It's, it was like, I should, this was something, it's so funny looking back, but like, I had some nerves around this, and I was thinking about sending this email, and finally one day I just, freaking sent it.
What were you afraid about sending the email? What was that? Like, they'd say no, or didn't want to talk to you, or not say, just not respond?
Yeah, I mean, that basically, I mean, because it's like, so I'm really into, just like mindfulness, and, a lot of this, like, personal development and working on myself is like a big, a big part of me. And anyway, I think about this stuff, and yeah, with that, I mean, I think what it was is there was this, like, before you like take the action, it's all potential. And so if I never sent that email, then it's like, oh, it remains this dream, but like, it's the dream is there, it's never gonna happen unless you do something. But yeah, there's this fear, because, when you take that action, yeah, it can have a good outcome. And look, like, it was a good outcome. I fast forward, spoiler alert, it's now my business. So like, it all worked out. But yeah, but it's like, if you don't, there also was the chance that they could have said no. And like, I think that's
why were you afraid of that? No. Why do you think?
Yeah, because it's like, if they don't say no, then the dream's still alive. It's never going to go anywhere.
I see. Okay.
It's like,
yeah.
It's never going to go anywhere, obviously, if you don't actually take that action. But like, you're not going to get a no either. So like, the dream is still there. Anyway, I mean, I'm a very like action oriented person, and look, like, I wasn't like deliberating, oh, do I send this email? I'm probably like, looking back at, I don't know. It wasn't like this whole thing. It was more like, I just kind of had in the back of my mind, like, oh yeah, I should email them. And then, one day finally did. I wasn't like,
yeah,
hovering over. And anyway,
I know. I think we all have that. I mean, I sent an offer to somebody, say, look, I like your business. I love your business. It's very profitable, but I have some puzzle pieces that are not together again. And I didn't want to create the perfect email. So I just outlined 3 of the puzzle pieces that I'm unaware of. I'm sure of. I don't have answers for. So I can't really make you an offer till I have this, but I can. I'm interested in your business.
Right. So exactly. Similar thing. And so anyway, reached out, got a response back quite quickly. And so I thought that was encouraging. We got on a call a couple days later, and and again, it kind of started off like, hey, we're doing some due diligence, and maybe if you're at capacity and you could send us deals, or if we're at capacity or, out of scope, we can refer to you. And, and then, and like, in the back of my mind, my hope was, wanted to explore the possibility of, an acquisition. And so, fast forward, in the call, we're kind of like, oh, well, yeah, at some point, maybe it makes sense for one of us to buy the other one. And then Chris actually responded and was like, oh, well, if that's the case, I think it'd make more sense for you to buy us. And like, this, like, my,
why? Yeah. Why do you
going off? And why did he say that?
Yeah. Why do you think he said it? I mean, like, there's the what you imagine he thinks he said, and then with the story he actually told, like, what's going on in the business. Yeah.
Yeah. I mean, I think if we look at kind of skill sets, like, it really, me taking over Centurica really is a good match for like my experience to build on the foundations that Chris and Brian, where they did amazing with the business. I mean, I don't know, significant revenue growth over the last, since they took it over, the business, grew a ton. But, with them, they were coming up against, kind of like a bottleneck in capacity issues, and a lot around fulfillment. And so they were basically like always at capacity, and didn't really have that experience around like building a scalable ops team infrastructure to be able to, scale deliverables. And so that is I do have a lot of experience with exactly that: remote teams, scaling deliverables. And so yeah, I think that's why, and Chris knew that I have this, he knew about Sellerplex and knew that we were doing due diligence, but also, it was a large team and doing all kinds of other stuff. And so I think that's why, that was part of why I thought it was a good fit. And I think, that's why Chris thought it would be, make more sense for us to buy them, because, of our, the strength around the team and infrastructure and, scaling deliverables that I have experience with.
So let me ask you about that. So let's say, assuming somebody watches this and they go, okay, due diligence seems like it's a service-based job. How do you scale a due diligence team with deliverables? How do you do that?
I mean, one, yes, it is 100% a service-based job. And services scale with more people. And so, I mean, happy to get into as much kind of depth around this. And this has actually been a big part of my, first 3 months, or I guess, I think I maybe just crossed my first 100 days as, CEO, or right about to.
Congrats.
CEO at
Yeah.
Centurica. Yeah, thank you. It's been a ride. But yeah, I mean, like the short answer is, service businesses scale with more people to deliver the service. The longer answer is, and if you'd like, I can kind of walk through. There's been already within 3 months, like a number of different variations of like the scalable delivery model that I've been building with Centurica. And candidly, like there have been speed bumps, challenges. I mean, especially at first, like the first plans or models did not work like I was originally thinking or hoping. And so, the ops, is currently on like version 3. But at version 3 is, man, I mean, we are like so much ahead of where we were at version 1. And yeah, I mean, happy to break down our kind of like how we're structured in a way that, will allow us to keep scaling and do more volume.
Yeah, no, I think I got it. I was just, we made an offer for a custom development company, and he thought it was worth $5 million. And then by the time we showed him the EBITDA, which is averaged out to $300,000 over a 3-year period, and we said, this is not scalable. It's only scalable. I mean, if we move the revenue up like this, our employees are going up like this. It's not going to be going up like this.
Well,
and then had a difference of opinion on the offer. And so,
right. Well, I mean, how you value that type of a business is a whole other, discussion. But on the scaling side, and this is something that like I very intentionally, so I'm involved with a lot of service business. I mean, my main businesses are service businesses. I'm an investor advisor in a number of other service businesses. And like, this is intentional. And the reason is because, well, there's a few reasons. One, service businesses rely on people. And if you can solve people problems, then that really goes a long way with resolving bottlenecks and solving problems for service businesses. And like I mentioned, recruiting and hiring and, remote teams has always been like a strength of mine. And so like, I have a really strong recruiting department that actually services, maybe at this point, maybe 5 different businesses. And like, knowing that I have, and that I'm confident in this, recruiting department, it just gives me confidence to go into service businesses and know that I can, overcome people problems and resolve people problems. So that's one. I mean, and yes, they do involve a lot of people, but if you can solve for people, then I think it goes a long way with this type of business. Yeah. But then the other one, to your point about how it scales, every business model has different advantages and disadvantages. I think with the service business, you're right. It's more of a linear growth curve. It's not gonna, it's not scalable in the sense like, if a SaaS goes viral and all of a sudden you pick up, 10x customers overnight. And yeah, like the SaaS can handle, maybe your customer service needs to be adjusted, but like, the business can scale easier that way. Or e-commerce, all of a sudden, you get in, some ad campaign that just like, hits and you have great return and you just scale ad spend and all of a sudden, boom, the business like takes off. Yeah. I think that's less likely to happen with a service business because as the projects and deliverables grow, you need more people to handle that. And so my experience with service businesses is like, it's less exponential, but is linear. And like, and honestly, like, and a big thing that I like about service businesses is, I think they're generally quite stable. And so, it's linear, meaning it's, fairly slow and steady. But what you're not going to have is like growth and all of a sudden 1 month it drops 80%. It's like less volatile. So e-commerce, you have an ad campaign that's crushing it. Then all of a sudden, the next day, the next week, ad costs go up. This campaign's not profitable. Now you're sitting on all this inventory. You're not able to sell it profitably. Like, that you're less likely to run into those kinds of, issues with a service business. I mean, look, everything again, pluses and minuses.
There's plus or minuses.
But yeah, and also with service business, I like the free cash flow. They're less capital intensive. Whether it's investing in inventory, investing in development, it's really like, look, we only need to pay people when people pay us. So it's like, it's less likely that you're going to all of a sudden, be underwater when, if sales go down, you can scale back on your expenses. And if sales go up, you can, increase your team and expenses. And so yeah, it's generally a good, good for, cash flow, which I like cash flow.
Yeah.
So
how,
I like
let's
services.
go back to the Centurica. Chris decides you should buy us. Where were they at that point? They were just max capacity. They were growing, but just max capacity, but healthy cash flow wise.
Yeah, super healthy cash flow, very profitable business. And yeah, at capacity.
Yeah. And then you came in with what kind of offer that said, okay, this guy can 10x us, or this guy can do a better job than us, or whatever that story is.
Yeah, it was, the business was valued on a multiple of, technically the metric we used we called it owner benefit, because we took basically profit that didn't include salaries for the two owners. And then I built in a deduction around what I thought it would cost me to replace their roles, because both of them were, one was very much working in the business. The other was doing some things, but one was like really heavily involved, and we can talk about the challenges around transitioning this person out. But yeah, so we had like the total profit number, and then deducted an amount of what I thought would be reasonable in order to hire my own team or replace these roles.
And so, but they weren't taking a salary, a line item salary in the G&A. They were taking it out of SDE or profits.
Yeah. Okay. Yeah. So, so I, built in a line item to deduce what I thought it would cost me to replace them. And, and then we applied a multiple to, to that, SDE number or whatever. And, we agreed, and that became.
So who proposed that? You proposed it first, or did the seller say we think it's 2x, 3x or something?
We sort of danced around it for a little bit at first, and it was like, oh, what kind of a range are you thinking? And like they kind of threw out a ballpark number of what they thought it was worth. But, and then it was like, ultimately the ball was in my court to, present an actual like, LOI offer. And so, yeah, like, but when I presented the offer, it was in line with all the, we were pretty aligned the whole process in terms of how we value the business, what we thought it was worth, So it really, I think like we both were just, had similar ideas or expectations around what the business, how to value it and what it was worth. And so
a lot of the time, so they bought that business, but a lot of the times, you buy these SaaS companies or e-commerce, and they're first time sellers. They don't have any experience around selling a business. So they always think it's more than it's actually worth.
Right. Well, these guys were running a due diligence business. And so looking at a lot of businesses, and so very familiar with the process and reasonable, we both were coming at this from like, I'd say, fairly
rational points of view. Yeah.
Right. And so, and like I said, we pretty much were aligned throughout the process in terms of, how much it would be worth and what was a market rate. And there was none of this, like, this business is worth 10x revenue, kind of stuff. And yeah, we both like, and look, like they, there were definitely a number of challenges for them in terms of like finding the right home. And, I candidly, I was a good fit. And so it was like, we both, it was a good fit for both of us. I think we both wanted to make it work. We both were reasonable. And look, like I didn't want to pay too much. And they also, we all just wanted like a fair and appropriate deal. I wasn't trying to like, undercut them. They weren't trying to overcharge me. And so, what we agreed on, I still think is like a pretty fair, fair price given the circumstance. And yeah.
Well, so what did that look like? I mean, was it creative financing? Was it cash out of the pocket, 100%? And did he leave? Welcome leave or
Mostly
what?
mostly SBA. So
Uh,
SBA, well, so yeah, used SBA for, a big chunk of it. Um, and then, my own down payment and
was that SBA 90% of the?
SBA was 70, capital injection was 20, and seller note was 10 or is 10.
Okay. Yeah. How long did that take to get approved for, qualified, and executed?
I mean, I think we got serious about pursuing, this acquisition at the beginning of this year. And so we, waited for the 2021 numbers to finalize in this. And so yeah, kind of got serious about the process in January. Um and yeah, we closed like the right around like either like right at the end of April or right at the beginning of May. And so, the whole SBA process was maybe 4 months or something.
Yeah. Yeah. And what bank did you use for that?
Called First Business Bank.
First Business Bank. Was it a local bank or it's like a regional live oak type?
No, they're local, and so used a great lender. So Steven Spears, I don't know, you might know him. Yeah, does a lot of these, he's like a SBA coordinator or broker. And so I knew Steven and reached out to him and then went through the pre-qualification process. And then he, connected me with, he shopped it around to some different SBA banks and found the one that was interested that then,
Liked software, or didn't mind software, didn't mind services.
well,
But it
I
was
mean,
that.
yeah, just, like each bank has different interests in terms of what they'll lend for. And this one, yeah, was interested or comfortable with this business model and it worked.
Yeah. So you executed on the deal. It's now yours. Did they leave? They have to leave with the SBA, right?
So they're not actively they're not day to day, but they are both still involved as advisors. And I mean, there's been a transition period, and it wasn't just like, and they are still involved. My team has taken over the like, we're running the business, but they both, have been incredibly just accommodating in terms of supporting our team and training our team and answering and still are available answering questions and so yeah, they're more advisors but not like day-to-day active.
Yeah. So when you own the business and you're underneath the really underneath the hood, was there anything that showed up that you didn't see before?
Yeah, good question. So I mean, yes, and I mean, there wasn't anything that showed up that I wasn't there
You're
wasn't
in the due
anything.
diligence business. So
Yeah, well, I'll tell you. I mean, I greatly underestimated the complexity around the service delivery. And so that wasn't like, it wasn't a surprise in the sense of like I knew this was an important item, but I underestimated what it would take in order to, build the scalable deliverables. And that's, like I mentioned, I mean, man, we've had, challenges the first few months, and first thing didn't work and had to go to the second thing and that worked, but then had problems. So then, like I said, we're kind of on V3 of the whole org chart and design. And yeah, like that's been a big learning curve around just like what, yeah, I underestimated like what it would take to successfully build our own deliverables. And so yeah, that was, I mean, I'd say, I don't know if surprising is the right word, but like I underestimated, and that's on me. I mean, the whole thing I've learned more in the last 3 months, taking over and running this business than I have in the last like, years. So that's good. Learning and growth is good.
yeah. Is there, when you say scalable, is there software you can write that creates coming out of a dashboard to help you with your due diligence?
I mean, maybe, but like, the bulk of the deliverable relies on people. And so, yeah, maybe I can share. I think it'd be useful. Like the way that we look at diligence,
Yeah,
there's
yeah,
really
yeah, yeah.
three buckets, right? We've got the financial diligence, which is with the primary of that is going to be, verifying the seller P&L versus our rebuilt P&L. If you want to get more in depth on the financials, you can get into quality of earnings reports. Then you've got operational diligence, which is going to be like, red flags, skeletons in the closet, as well as like the start of like value creation of like, oh, well, like I can optimize this. I can sub in, I can save costs here. And so that's on the operation. And then there's the commercial or like market diligence, which is more, forward facing growth, like, yeah, there is like market analysis, competitor analysis, as well as just kind of like forward looking opportunities of like, oh, well, like, what if we added a sales team, or what if we, explored this marketing channel? And so anyway, the three buckets, we got financial, operational, commercial. And any due diligence is going, and one thing I'll say that's unique about Centurica is our so we're a mixture of like accounting and finance, as well as like actual, online business operators. And so that makes us unique in the sense that we can provide both the financial diligence as well as this operational and commercial diligence when it comes to an e-commerce business or a content website, or we're getting better with SaaS and everything, because stuff that I've learned getting into the due diligence industry. Most due diligence companies are very siloed. So it's like you have a financial diligence accounting firm, you have a legal diligence law firm, you have an HR diligence, service provider, you have an operations diligence consultant, and it's very fragmented. And and that's one of the opportunities that I see is to really, we already do offer multiple significant, scopes under one house. So we have the financial, operational, commercial. And, we're able to do that because, yeah, we have a finance department, but like I have a deep, my experience, I personally have experience with all these business models. I'm very, connected to e-commerce, content sites, as well. I mean, service businesses I've been running. And so that like, we're not just an accounting function, although we have that. And that's certainly a necessary piece. But that's one of the things that makes us unique, is that we can like touch multiple areas of diligence, which is not common. So anyway, onto the deliverables. Whether or not you want the operational diligence, whether or not you want the commercial diligence, really, like every acquisition, you're going to want the financial diligence, which is, verifying the numbers are what the seller says they are, matching the P&Ls, where are the differences.
Let me ask you about that. So somebody's running with QuickBooks or Zero or some other uh, application, financial application. How deep do you go into verifying their Stripe accounts or PayPal accounts or Amazon accounts, and then go into the taxes?
So, what we look at is basically we want to get eyeballs on money in, money out. And so, let's say we're kicking off a project, we have the kickoff call, and really the goal or the outcome of that is to get really clarity on like the document and access request list, because we need like eyeballs on everything. And so, let's say you're a simple FBA business. You're selling on one Amazon marketplace. You've got a bank that you use. You've got a credit card. You use Zero. So in this case, we're going to want like, eyeballs and access to all of those parts. So we'll want, direct Amazon account access. So we pull our own data in the reports. We'll want bank statements, credit card statements, month by month for the accounts that they're using. We'll want, QuickBooks or Zero or whatever their accounting software access to be able to like go in and, really that's just kind of pulling the general ledger. And some of these things we actually verify, like there's more than one way to verify. But yeah, to your point, we want to verify and eyeballs on all the money in, all the money out. And, we take that to then reconstruct the P&L to match against the seller P&L. And, and then back to your original question, like this takes accountants, like it's a very manual process. And so yeah, we have an accounting team. There's, currently 5 accountants where it's like each one can work on 2 projects at a time, the main deliverables, the P&L rebuild, and, identifying the deltas. And hey, the seller reported $1 million in earnings, and, our rebuild was, 900,000. And so, oh, that's a delta of 10%. And where did that come from? And it's like, it's a very manual process is what I'm getting at.
Yeah.
And is there potential to automate parts of the process via software? Sure. I'm sure there are, but like,
yeah, I wasn't really thinking about that. I was thinking about just the information you can get from Amazon. But I do want to ask you about how often do you see somebody, you have the Amazon site or one product, and they have 3 or 4 other products started or selling on Amazon, but they just want to sell one line or one company, but their expenses and sometimes our revenue is commingled with another one, and you try to extricate that.
Yeah, these things can get tricky. I mean, it's really it's all a range and all the above. The best for us is like, look, it's a single sales channel, single accounts, like boom, that is one degree of difficulty. And then we just finished a project or wrapping up a project where like there's they have one parent Amazon account, and they were selling, then they opened up a new account for, that they were actually selling, and they're transitioning the SKUs from the old account to the new account. So there's like, and we're talking like close to 500 SKUs of what they're selling. The parent account has like thousands of SKUs. So like, yeah, it gets tricky. That's maybe the trickiest one that we've actually worked on, where it's like, we're pulling a portion of SKUs from one account that actually is like selling out of inventory, that's selling into the next account. And like, yeah. And look, this is also where, we, really like a differentiator, because like we understand Amazon accounts and businesses. We have a lot of that experience more than just like some random accounting firm. And so like, when you get into these complexities, and look, like this was a challenging project for our team. I'm really proud of how we, we're able to deliver it. But like it does get tricky. And that's also where we have a lot of experience with these specific niche models that allow us to deliver on stuff like that, more than just like an accounting firm that doesn't understand Amazon as well.
That I picked out of a phone booth. So what is the final report? If you're doing a buy side assignment, what does the final report look like? Are you making a score? Are you making an evaluation, or what are you doing?
Yeah. So the final report. So the deliverables, for most projects. So there's going to be the P&L rebuild, and that's like one of the core pieces. And so it's literally, we have, and this is something I'm actually like, so I'm not an accountant. I'm learning a lot about accounting, now as the CEO of a due diligence company. But yeah, so we have the P&L rebuild that's like delivered, that's a separate file, Excel file of the P&L. And like, this is something I actually recently learned that I think is super cool, but we utilize like a method or a process called like audit trails or audit trailing, which basically means we're not just plugging in numbers into spreadsheets. Like all the data is on the sheets and like dynamically synced and formulated. And so when you look at any one column, it's not just the number. You can actually dive in and be like, oh, well, like this number.
So here's the history of the number. That's kind of a blockchain thing, isn't it?
Sort of. Yeah. it's all about like, transparency and being able to, and so this is something that, one of the, like, I think this is a significant improvement that we've, implemented, where like, as a buyer, there's just more transparency, and you can look through the sheet and see like, okay, like this number, you can follow where the numbers came from. It's not just like an input. And this is something that's like, this is standard practice with like big accounting firms and consulting firms. But again, this is like, the vision for Centurica is to really bring like, a high level of professional service delivery to these online business assets. And I think that's a big opportunity because a few macro trends. So we've got on the sell side, the online business assets themselves are professionalizing. The businesses are, it's not just a guy in his basement refreshing affiliate earnings. People are building, 7, 8, 9-figure e-commerce, SaaS, some super big content websites. They have teams, they're the CEO. It's like the businesses themselves are professionalizing. And then on the buy side, there's becoming a lot more professional interest. And so what do I mean by that? Private equity that 5-10 years ago wouldn't touch a mid 7 or 8 figure e-commerce brand. Now, they are interested. And, a private equity buyer has a different level of, requirements of things they're looking for than if you're an inexperienced individual buying a $50,000 website versus a private equity firm buying, a $10 million e-commerce store. Like there's expectations as well as opportunity to kind of meet that higher end client, which that's one path that I'm really committed to, of continuing to professionalize so that we can really, act as like a bridge between the gap of these more professional buyers, private equity, the roll-up funds and aggregators, family offices that are interested in these online assets. And so we want to deliver like a very, a high professional level service. Anyway, this whole audit tracing or audit trails is a part of that. And so like our basically our P&L deliverable is like fairly robust. You get the P&L, the rebuild versus the seller, the deltas, it's all organized and categorized organized, categorized. So, so we deliver that to the buyer, and like, they have questions and like, oh, why is your cost of goods 3% higher or lower? And, why are you missing, there's a 10% gap in insurance fees. Why do you have and we need to be able to, explain these things. And also in having that like, audit trail, it answers a lot of questions because, a savvy, finance person can look at that sheet and like, that answers a lot of questions preemptively because we're like showing our work basically.
Yeah. What's the makeup of your customers right now? Is funds, PE, family office, independents? What does that look like?
Yeah, so we work with a good amount of, one kind of client base is going to be FBA aggregators. And we do a lot with FBA aggregators, and like, we love repeat clients. Those are, yeah, that's great. So yeah, we do have a number of, aggregator or private equity firms that are, multiple buyers. We also get a lot of individuals. And so, someone, maybe they're doing an SBA deal, more, I mean, we're going more up market because,
they pay more.
right. I mean, well, like if you're buying a $5 million business or a $10 million business, a $10, $15, $20,000 diligence bill on a $10 million acquisition is like, point
pays for itself. Easily.
Well, I mean, I think it's worth it and from insurance, but just like, if we charge, and let's say it's a $20 million or a $10 million business, a $20,000, project, that's, what is that, 0.2% of the overall price?
Yeah.
Versus if it's a $800,000 business and we're charging, $8,000, this is like 1%. And so, the smaller deals,
to avoid a landmine, of course you're going to pay that bill. Yeah.
Right. I mean, look, I think it's worth it, but like it's, we can provide a lot more value for bigger deals. And yeah, we can charge more, and like in the direction we want to be going is more up market. And like, I'm really committed to, continuing to improve our services, continuing to improve our deliverables, continuing to add more value. And so I want to go more up the value chain. And yeah, and I mean, we still, want to be able to service, sub-$1 million deals. The lowest that we do is, so we have like a minimum fee of 6K or 8K or 7, kind of depends on our capacity. But like, you're not, if you're buying a $50,000 website, you're not going to spend $7,000 on diligence. So the smallest deals that we usually touch, I think we've done, 600K, 700K, some in the 800, 900, a million range. But then, yeah, more in the, 1 to 10 is going to be a lot. And we have some bigger ones too. We're wrapping up a $30 million deal. Yeah, 12 million, 11 million. So yeah.
Cool. So I got to tell you, man, an hour went by real fast. So I only don't have a lot of time. So where do you want to go with this? Are you just digesting this, or is there some other kind of growth? Did you want to go after this?
I mean, I see this as like, this is a long-term play and journey for me. I mean, I'm really excited to be, in the online M&A ecosystem. I think that, like we talked about earlier, 10 years ago, there was no online M&A ecosystem. Now it's a thriving industry. I still think these are early days. There's a lot more professional capital that is in, like the seal's been broken. People have, real money has been jumping in. I think it's still early days though. There's still a lot of money on the sidelines that's interested in these assets that hasn't yet gotten involved. And so, I think the industry has a lot of room to grow, and I want to, be a part of that and a contributing factor. And I think there's a lot of opportunity for us to add value for our clients and just, have a really differentiated deliverable, which, to have a professional deliverable, offer things that, our competitors aren't. And, that's what I'm excited about, and really just building this long-term, this is like a long-term project for me. And I'm excited to be in the industry and grow with the industry. And yeah, I mean, it's been a crazy 3 months so far. I feel a lot better about the next 3 months, after all of our, how much we've grown and improved already. Like, yeah, I'm really excited to see where we are in a couple of months. I mean, look, we are not yet where like at the vision for the deliverables and the breadth and depth of scope that I want to be able to cover. But we've made, significant progress since, day zero. And I'm excited to keep building on that. And like, I love service businesses. I love, solving problems, creating value for others. And like, I think Centurica is a huge opportunity to do that. And I'm excited to be, be on, along for the ride.
Well, congratulations, Nate. I want to appreciate or just thank you for being on the show. Thank you so much. Congratulations on your acquisition.
Yeah, thank you. And yeah, for any of the audience that's interested, can just check us out at Centurica.com. You want to connect with me, Nate at Centurica. Check out any of my social media. We were talking earlier. I'm very into yoga and health and fitness as well as M&A. And so if you want to connect on Facebook, Instagram, Nate Ginsburg, LinkedIn. One thing that your audience also might be interested in, we're finalizing an updated. We have some proprietary data around online acquisitions from we have like a Market Watch web app that pulls listing and sales data from a number of brokers that list online assets
and what they sold for, multiples.
Yeah.
Okay.
And so yeah, we're finalizing this report. It'll probably be, I don't know when this will be published, but it'll be out soon. And yeah, there's some really cool insight that I'm excited to share around, volume of listings over time, per category, multiples over time.
That's beautiful. That's what people want to see. Yeah.
Yeah. Well, I'll certainly, I'll ping you when it's ready. And yeah, look forward to sharing that. And happy to connect with anyone that is interested in, thinks there's anything we can do to help or, just any opportunities to explore together.
Well, great. Thank you so much, Nate.
Thanks for having me.
Cheers.